Hello, crypto warriors, risk managers hiding behind spreadsheets, and the rest of you pretending you knew what yield meant before it became synonymous with Taylor Swift tickets. I'm Sen B'Hiro. Welcome back to the SENB Daily Brief, coming to you Wednesday, November 12th, 2025. The markets are open, the coffee's hot, and the only thing still on holiday mode is your portfolio's mood. We're just past the Veterans Day break. The government shutdown barely sneezed, and now we've got inflation's big test coming up tomorrow. As Reuters reports, U.S. regulators are working on a new token taxonomy classification system for digital assets, meaning your favorite meme coin might soon need a lawyer, a spreadsheet, or possibly both. Meanwhile, major cryptos are slipping again, thanks to a cocktail of thin liquidity, macro jitters, and lots of traders thinking, wait, do I still own this? Coin speaker +1. All right, hold on to your mugs. First up, we'll check how the stock market, crypto, and global flows reacted overnight. Then, we'll dive into the big question. Will tomorrow's CPI be the hero or the plot twist? Let's roll.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
Okay, we're back from the holiday hangover. The markets are open again, and yes, the coffee just went from optional to required. Here's the deal. U.S. stocks are already showing signs of life. The Dow Jones Industrial Average climbed to a fresh record, up about 0.6%, as traders cheered possible resolution to the 43-day government shutdown. Meanwhile, the S&P 500 is basically treading water, and the Nasdaq Composite is slightly down, driven by tech valuation jitters, even as chips like advanced micro devices AMD rally nearly 10%. So you've got a split here. Industrials and old school risk are climbing on relief hopes, while tech and growth are pausing to ask, wait, what if the party's over? On the crypto side, it's a mess. Bitcoin slipped below $102,000, down approximately 2 to 3% on the day, and altcoins like Ethereum, Solana, and XRP all pulled back several percent. Barons, that's right. While stocks are partying in the lobby, crypto is stuck in the elevator. One reason, macro data is still frozen thanks to the shutdown. That means fewer reports, fewer reveals, and more waiting in the market. Traders hate waiting almost as much as they hate fees. According to Reuters, bond yields are falling as shutdown relief hopes rise, and the yen is sliding to 9-month lows, all signs that global flows are redirecting. Oil is hovering around $64 a barrel. Gold is creeping up. Basically, the risk on but measured vibe. Nothing wild, no breakout yet. So, what's the takeaway? The market is back in motion, but the momentum's cautious. It's like someone restarted the treadmill but forgot to turn on the speed. All right, that's the market snapshot. Coming up next, the macro calendar, the looming inflation prints, and what happens if the Fed drops a curveball. Stay with me.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
So all right, let's take a deep breath and look downrange, because the big headline this week isn't what already happened, it's what's about to happen. Tomorrow morning, Thursday, 8:30 a.m. Eastern, we get October CPI, the inflation print that decides whether traders sip espresso or shoot it straight into their veins. Economists polled by Bloomberg expect headline inflation to rise at 0.1% month over month, with core inflation easing slightly to 3.3% year over year, which would be the lowest in nearly 3 years. Translation, if the number's hot, the Fed gets grumpy. If it's cool, Twitter declares victory, and everyone suddenly loves risk again. The Wall Street Journal notes that several Fed officials are still preaching patience, meaning no one's ready to pop champagne on rate cuts yet. They want to see sustained progress toward target inflation. Patience. Funny word for markets that refresh CoinGecko every 7 seconds. Still, the bond market's whispering sweet nothings about rate cuts by mid-2026. The CME FedWatch tool prices in about a 40% chance of a quarter-point cut by May, which is basically Wall Street's way of saying, we know you said not yet, but what if? Meanwhile, jobless claims data Friday could either confirm or kill the soft landing story, and Reuters says retail sales figures next week will show whether consumers are still spending or officially broke. So here's the setup. CPI tomorrow, jobless claims Friday, retail data next week. 3 checkpoints that tell us if the Fed's war on inflation is cooling down or just regrouping. And remember, every decimal place in CPI comes with 10,000 think pieces and exactly 0 accountability. For crypto, this all matters because inflation data drives liquidity expectations. If rates stay high longer, liquidity stays tight. And risk assets, including Bitcoin, feel like they're trying to moonwalk in quicksand. On the other hand, a cooler CPI could light a short-term rally faster than a gas station burrito in July. The narrative flips instantly from pain trade to party mode. So that's the week ahead. Inflation roulette on Thursday, a Fed chorus preaching patience, and traders oscillating between zen and panic. Coming up next, we'll zoom back into crypto itself. Who's buying, who's selling, and why altcoins are acting like they just heard the word recession.
A treasure hunt beneath the data seeds, fortune coded in these blockchain keys.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's pull out of the macro weeds and head back into crypto country, where logic goes to nap and volatility pays the rent. According to Barron's, Bitcoin slid to about $101,700 this morning after briefly touching $104,000 overnight, while Ethereum fell back to around $3,060. That's a two-day drop of roughly 3%. Not catastrophic, but enough to make Twitter thread writers switch from bullish caps to spiritual quotes. Analysts say we're seeing the classic pre-CPI shuffle. Big players hedging ahead of tomorrow's inflation report, and smaller investors just panic selling because they read the word recession in a headline. That's called risk management, or as we say in crypto, vibes-based trading. CoinDesk reports that open interest in Bitcoin futures has spiked to its highest level since May, even as spot volumes cool. That means institutions are still playing, but they're doing it through derivatives instead of spot. Translation, they don't want to own it, they just want to bet on it. Kind of like dating apps, but with margin calls. Over in the altcoin world, Market Pulse notes that Solana's DEX volumes are down 11% week over week, and meme tokens like Doge and Pepe are drifting lower as speculative flows dry up. It's a classic midweek mood. Volume light, volatility twitchy, and everyone pretending they have a plan until the CPI drop either validates it or vaporizes it. If you've been around long enough, you know this dance. Bitcoin shrugs, altcoins bleed, and Reddit goes silent. That's usually when smart money starts creeping back in. Meanwhile, CryptoSlate is tracking a trend in stablecoin inflows back onto exchanges, a potential sign of dip buyers waiting for tomorrow's data before pulling the trigger. So if you see a random green candle this afternoon, it's probably some hedge fund front-running the headline. And let's be honest, for the retail crowd, the best strategy right now is hydration and deep breathing. You can't time macro data, but you can choose your coffee strength. So to recap, crypto's in standby mode, traders are jittery, liquidity's thin, and tomorrow's CPI print is the market's main character. Whatever happens next, it'll be volatile. And that's why we're here. All right, coming up next, we're going to talk about the illusion of midweek momentum and why so many traders get wrecked right before a data drop. I call it the Mid-Week Mirage. Stay tuned.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's talk about one of the oldest traps in the market book, what I like to call the Mid-Week Mirage. Every Wednesday, right about now, a certain breed of trader looks at the charts and says, hey, it's stabilizing. Maybe we're turning the corner. And by Thursday morning, that same chart looks like a crime scene. Cointelegraph calls it the calm before the macro. It happens before every big data drop, CPI, jobs numbers, FOMC minutes. Markets get this illusion of order. Analysts say liquidity is thin, volatility is suppressed, and algos are basically playing hot potato with the same price range. What that means is prices look stable, but it's a mirage, because beneath the surface, orders are stacking, hedges are shifting, and whales are loading positions like it's Black Friday. They know retail traders see quiet market and think safe entry. Spoiler, it's not. You can almost hear the institutional dialogue. Let's let them get comfortable, and then we'll remind them what volatility feels like. Forbes Crypto points out that on average, Bitcoin drops 1.8% in the 24 hours leading up to CPI reports, a pattern repeated 6 times in the past year. Then, it snaps back up within hours if the data is softer than expected. It's like financial whiplash, and the mirage is the illusion that you can front-run the headline. You can't. Even bots barely can. So how do you play it? You don't panic, and you don't overtrade. Wednesday's job is positioning, not predicting. If you're in, tighten stops. If you're out, stay hydrated. And if you ever feel like this time is different, remember, that's what every bag holder said before becoming a case study. Reuters sums it up perfectly. Markets are orderly until they aren't. And that's why this midweek quiet is a mirage. Peaceful on the surface, chaotic underneath. So yeah, today might feel calm, but tomorrow's CPI print is coming. And the mirage always melts in the heat of new data. Coming up next, time for a word from the only thing that actually keeps this show running through macro meltdowns, Whole Shot Coffee.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, it's time for the community mailbag, the part of the show where I read your messages, answer your questions, and occasionally question your life choices. Let's dive in. First up, Ravi from New York asks, do you think tomorrow's CPI number actually matters for crypto, or is everyone just pretending? Good question, Ravi. Yeah, it matters, but not in the way CNBC says it does. If CPI comes in cooler, the Fed breathes easier, yields ease off, and liquidity creeps back in. That means more risk money. And crypto loves risk money, like TikTok loves bad financial advice. If it's hot, we get the inverse. Doom tweets, panic charts, and me adding an extra espresso shot. Next one comes from Samantha in Portland, who writes, why does it seem like Bitcoin always drops before CPI? Because, Samantha, Bitcoin has separation anxiety. It doesn't like attention on the macro economy and throws a fit every time Jerome Powell makes eye contact with a microphone. Seriously, though, it's hedging behavior. Big money pulls out ahead of data, retail follows, and then everyone acts surprised when it bounces back after the headline. Carlos from Texas asks, why does everyone blame the Fed for everything? Isn't it our fault for spending? Carlos, I love this question. You're right. Yes, we spend, and yes, we print memes faster than dollars sometimes. But remember, the Fed's job is literally to manage money. So when things break, we blame the mechanic. That's how it works. Still, the real lesson, budget like a boomer, invest like a degen. Now, Amber from Denver writes, how many cups of whole shot coffee do you actually drink before recording? Amber, I signed an NDA with my doctor, but let's just say my blood type is now espresso number 67. If I ever sound too calm on air, it's because I'm waiting for the next cup to brew. And finally, Luis online sends a message that just says, so when's Tina Bean coming back? Luis, the answer is soon. She's still in the HR office arguing with an AI about dress code policies and coffee temperature standards, but she will be back. And trust me, the unsolicited advice segment is already in beta testing. All right, great questions as always. If you want to get your question on air, you know the drill. Grab some SENB tokens, submit your proof of thought, and get featured in the next mailbag. The best ones make it on the show. The worst ones get framed in our office bathroom. Coming up next, the token plug and closing thoughts before we wrap up this midweek edition of the SENB Daily Brief.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
Before we call it a day, let's talk about how this circus actually runs. The SENB token. It's not just a ticker. It's your backstage pass to the B'Hiroverse, the ecosystem that fuels this show, the community playlists, and the mailbag you just heard. Holding SENB gives you access to the proof of thought system, your way to submit ideas, earn shoutouts, and help shape the segments we cover here every weekday. Every week, we spotlight community creators like Paul Hahn, who made the show's theme, and other listeners turning caffeine into content. That's the point. This isn't a one-way broadcast. It's a decentralized conversation, powered by the same energy that built crypto in the first place. You can't stake sarcasm yet, but you can stake your participation. Learn more or grab your tokens at senbhiromedia.com. That's where the radio meets the blockchain and, apparently, the caffeine addiction support group. All right, time to wrap it up. Today's markets showed a cautious comeback. Crypto's in pre-CPI hibernation, and traders everywhere are pretending they're not nervous about tomorrow morning's inflation print. So, take a breath, top off your cup, and remember, sometimes the smartest trade is patience, preferably with caffeine. I'm Sen B'Hiro, and this was the SENB Daily Brief, Wednesday, November 12th. Stay caffeinated, stay skeptical, and I'll see you tomorrow for the CPI Reaction Edition. The SENB Daily Brief is a production of Sen B'Hiro Media in collaboration with Whole Shot Coffee, coffee that fuels champions. Written and hosted by yours truly, Sen B'Hiro. Production, editing, and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit senbhiromedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.